SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. Bitcoin's done quite well for itself from what I can see here. So let's have a little look at the chart. We've got Chairman Powell speaking today about the economic outlook of the economy and labour, labour and jobs reports, stuff like that. So that's fine. It is what it is, but it's likely to cause some volatility when the American session begins. So yesterday we were talking about how the overall trend is still down, but there's hope because we'll be looking for a trend signal to form, probably over a couple of days if we sustained yesterday's price. But no, we actually decided to move higher, and with that came the trend signal. So we've got an uptrend signal that's been confirmed now. We've got the cheeky span above price. We got price above the cloud, and we got the cross above the cloud. So this is a decent one on a 4-hourly. So now we can think about the areas on the chart which we were talking about yesterday. So the first one's been met, which is 17,000. The next one would be basically 18,000, and then above that would be about 18,500. We do have this 200 exponential moving average sort of sitting in the middle here on the 4-hourly. So we're talking, I suppose, moves of $500 a piece, $500 up incrementally to hit these areas of support and areas of interest. The thing that I suppose would dampen is sort of these moves to be sustained, despite the trend signal, is the money flow index. It's obviously quite high, quite fast, and there's one thing that is good about the money flow index is it's quite good at navigating sort of toppy areas or peaky areas, even in sideways moves. So you got these bottom to I suppose a top over here, consolidation, top over here. Yeah, we went on a little further, but generally it was more or less the end of that period. Top over here marks that top, big crush down, top here, blah blah blah. Anyway, it's just a nice little. It's like just a way to help you not FOMO really. So it's there's a trend in play, but for the moment it looks like it's getting ready to fizzle out. This is probably one of the reasons we have this wick on here already. But money flow index doesn't actually get you the top, but it tells you it's more of a risk, to monitor your risk really. If you're looking to stick money in at this exact level, always have a look at the money flow index, and at the moment it's not massively high. It can obviously go a lot higher, but generally speaking we don't want to be buying towards the comfort zone until we get outside of the comfort zone. So that's quite good, and the bullish divergence from that we saw yesterday, 1-2 drives, seems to have played out. Plus we're outside of the descending triangle as well, which is the giant bear market triangle that we've been in since December, or the peak basically of last year. We did creep out of here before the FTX situation pushed us back in. This was the Everything Bounce 2.0, by the way, which probably would have continued on. My target was 26,000, but FTX says you're not having that. No way am I letting you do that. But the rest of the markets, traditional markets, did quite well. And I've been saying it for a couple of weeks. I think that the low might be in for Nasdaq and S&P. There's a good chance, I think, that the low has been met. So the bear market effectively being over, and we're going to go into a period of accumulation for traditional markets. That might also transfer over to Bitcoin. We're not entirely sure about that yet, but there is a chance that the low is in for Bitcoin. There is a chance, but I think it's more likely that it's in for traditional markets, and something might come around the corner and hit Bitcoin, or Bitcoin might just continue to move further and further down. So I'm not willing to say that the low is in for Bitcoin, but there is a chance, but it's a better chance for traditional markets. So, with all this in mind, I would encourage you to like the video at this point now, because I've been told that the algorithm likes videos getting liked halfway through, because it proves that you enjoyed the video. So give the video a like if you like it. If you don't like it as well. It's just a click. Right, so that's Bitcoin. We're above this descending triangle again. So again, every reason to believe that we will remain above here, but the move isn't massively bullish on the daily, as we've already hit the top of the Bollinger Band here, which is very tight, by the way. We're above the center of the Bollinger Band as well, and the 21 exponential. So there's a fair bit of reason to get excited that things are starting to turn around and change. The 4-hourly, like I say, governs a current small-term time frame trend. The daily still very much in a downtrend despite breaking out of the triangle. And, you know, things like MACD show a cross, but they are far, far, far away from sort of major bullish territory, which is above the 0 point. But we're not scared. I'm not scared. There's no bearish divergence, which is a good thing. So we're not looking for anything ridiculous to take place. Now, if we go back to a weekly here, there's a lot of ground to make up. You know, this box of interest, which would be the top target for this current move that's taking place here, ending around 18,500 or 600. We've got the 10 exponentials right in the middle of that. And if we sort of look at how far away we are from the major moving averages, like the 200 and the 20 even, which is 20,000. 200 exponential is 24,500. There's a lot of ground to make up before we actually break bullish, like as in like proper bullish, bull market bullish. You know, the last time I bought Bitcoin in mass was at the end of the last bear market, during a period of accumulation, once we reclaimed this 20 weekly moving average. You might think that that's crazy, but that's generally the best thing to do. So, you know, watch the whole thing collapse. People were saying, what are you doing, man? I said, I'm just waiting. Wait, I'm going to buy Bitcoin. People say, have you not seen the Bitcoin chart? It's awful. And everybody says it's going to 0. So, well, you know, it might be the case. So I'm just going to wait. Just going to wait. And here we found ourselves crossing above the 20 and the 10 exponential. Perfect timing, really. Buying around, basically, give or take, around the just below 4,000, which is pretty sweet. And that was the same for all crypto, really. I bought Ethereum, I bought Bitcoin, all at that level for the hodl. If we're looking to do that now, it means that we're going to have to reclaim sort of, I suppose, the $20,000 zone. And I don't think just reclaiming it on a big pump up is going to be the right way to do it. I think a period of accumulation between now and the beginning of next year is the most likely way of doing it. And so at lower levels still in the higher teens, the way that this 20 simple moving average looks, yeah, at some point towards the beginning of next year, reclaiming that area would be a better time to think about buying for the long term, unless of course you don't really mind exactly where you buy because your projection is, you know, 3 years, 4 years down the line. It shouldn't be too much of an issue. But you know, no one catches the absolute low. What you want to do is buy into something that's going to go up, you know, and the sooner it goes up, the better. And at the moment, even though the short-term timeframes do suggest a further upside, maybe by another, you know, $1,000, maybe $1,500 from where we're at right now, maybe it's not the beginning of a bull market as far as I can see. And again, today of all days is going to be crazy because it's not an FOMC meeting. It's similar. It's basically Powell's going to get on the mic, isn't he? Start to talk about how crap everything is, or how optimistic everything is, and the markets are going to listen very carefully and interpret every last little eyebrow shake and lip pout that he does as some kind of indicator, and that's basically what's going to happen today, which is something that can't really be presented on a chart, I'm afraid. You know, can't do that sort of thing on a chart. So long story short, short-term time frames look quite good. Max top target would be 18,500. Can't see it breaking and holding above there. Not in the very short term timeframes, especially with the volatility that's going to come today. All kinds of madness is going to happen. So this is the last day that you would want to do any kind of futures trading on Bitcoin. But there is hope. Like I said yesterday, there is hope, and the hope has been emphasized just this morning by this move and this signal that's been generated on the Itchy Cloud. So like I say, it looks reasonably good. So the hope still remains, but the bull market has not yet potentially, you know, I wouldn't say definitely not begun, but we could still be in this period of accumulation. That's what we could be in right now. Operative word being could. There's no guarantees, but we're likely to be seeing a real change of behaviour soon. But it's going to be a weekly thing for me, and it's also going to tie in nicely with the dollar, which again looks very much like it's in a downtrend. And if the best thing we can hope for is for this upwards channel to break. You know, this has been 10 years in the making, more than that, about 12 years, up down to the bottom to the top, and now I think this is the general way that we're going to be moving. Probably not quite that late, but maybe 2024, 5, 6, hit the bottom of the channel. And like I say, the best thing we can hope for is that we break down, because rising channels like this, they are actually more likely to break down of this formation than break out of the formation. So you know, it's bullish until it breaks bearish. And for the moment, you know, we've almost hit that target of the 50 exponential moving average, almost hit it, which is that green one here. We've got support on the daily 200 and the 200 exponential as well, which is fine. But we're getting rejections already from yesterday and today on the 10 exponential, which is where we were getting rejected last week as well. So it's very encouraging. We've also got short signal on the Itchy Cloud for the for Dixie as well. So, and you know, just before we end this video, just a little bit of a tidbit. I mean, TA aside, which seems to have held up quite nicely on this one, it's done very well actually, and it's not just the Dixie we've looked at. We've looked at, you know, a lot of the currencies that feed into the Dixie, so it's not as easy as looking at the Dixie, but in hindsight, it kind of was. The fundamentals of all the central banks, that, as far as I can see, is that America, being the powerhouse of the world, you know, very strong economy, they can afford to raise rates like they have done and not completely demolish their own economy, which they haven't. Other central banks are afraid to do that, the UK being one, and the ECB of the European bloc, another one, Japan, another one, because their economies are on very shaky ground, basically, and they can't afford to raise rates at the same speed. But they're going to have to play catch-up unless they want to have inflation continue and drag for a very long period of time, which they probably will anyway. Whereas America, it's almost like they're tearing off the sticky plaster. It might not seem that way, but that's kind of what it is in comparison to other central banks. And so what this means is that once we start to see some really favourable CPI figures, really good ones, you will also start to see the Fed start to tone it down and say, all right, we'll go to 50 now. We'll go to 25. In fact, we won't do any for a little while. We'll just let's see what happens. And all the other central banks are going to have to continue to raise rates. It might be still slow and steady, but they're going to have to start to do it, and that's going to that sort of move is going to reflect on the Dixie as well. And so it seems inevitable that we're going to stay in this channel. And so if that's the case, yeah, you might see some ups from this kind of level. You might even revisit the top, but basically, as far as I'm concerned, the channel of this chart is what we should focus on, and the channel I think is going to remain. And then, like I say, we could even see the channel break down. We're talking yearly here because this is a weekly chart here. Turn off all this noise. It is more or less that simple. It is pretty much that simple, and so we'll be moving back down towards this bottom area around here. You know, basically 100. And see where we go from there. Between now and 2026, I would say. It's in line with a 4-year cycle, this up and down channel. 4 years apart, more or less. 3 to 4 years apart from the low to the high. That's very, very encouraging when we think about how Bitcoin's going to behave in its next 4-year cycle, which we should start any minute, if we haven't already. Start their 4-year cycle. So 3 years of up, 1 year down. 3 years up, 1 year down. That's the way it goes, and it's also how the Dixie likes to behave. Right, so if you haven't liked the video, like it now. If you don't like the video, I don't know why you watched it all the way through. You might as well like it anyway, just because, I don't know, you must have enjoyed it if you got this far in some way. Anyway, I hope you have a nice day. Take it easy.